Hello, this is Dr. Richard Flight, and this is a short presentation on target market analysis. So specifically what we want to do is evaluate potential target markets that have emerged from the segmentation process so that we can focus and marshal our resources towards the target markets that make the most sense for our firm to try to pursue. So again, that's what the nature of this short presentation is all about, identifying and specifically evaluating target markets or market segments which make the most sense for our firm to engage with and pursue and try to make our customers. The other element that we cover when we talk about this is market entry and market entry strategy. So we'll talk a little bit about some different strategies that we can use as we define our market from a mass market to more of a segmented or targeted market to maybe even a mass customization one-to-one type of a market approach. So that's what it is, and here's the presentation. Okay, so here we are. We want to begin to analyze our market segments that we have identified after we have segmented the market. So we take a general market of consumers, and then we split those consumers up. Ideally, we want to split them up by their needs and wants and their motivations. Sometimes, of course, we use segmentation criteria that deal with demographics and geographics and so forth. But generally speaking, we want to find consumers that can be grouped together, that behave similarly towards our brand or our product, so that we can create an optimal marketing plan or value proposition that is targeted and specifically for that group of consumers. So the question now is, once we have the segmentation process complete, which consumers make the most sense for us to target? So generally speaking, we can think of the size of the segment, the growth potential, the profit potential for the segment as being positive elements. We can consider how many competitors we would have to face in order to be able to serve the market that we are looking at. And we can look at the strategic fit that that market may have in conjunction with our goals as a firm and our ability to reach them culturally as a firm as well. One tool that can be used would be a scorecard of sorts, where we list on one side the different market segments that we have identified from the segmentation process. And then we analyze each segment based on a series of different criteria and basically score each segment to identify which ones would be the best fitting ones for us to be able to go after, to consider going after. So here in this example, we have different segments here. So we have a late teen, mid-20s, upwardly mobile college segment. Then we also have a women, young family, traditionalist segment. And we could also have other segments as well. Again, ones that emerge from the segmentation process. And then what we'll do is we'll look at different criteria, like how large each segment is, whether the segment is growing or shrinking, and how quickly it's doing so, how profitable we think the segment could be, how much market share we feel like we would be able to earn in that market segment, the level of competition we would have to face in order to reach those people within that segment, the habits and the culture of the segment as they relate to our cultural fit. So like, does our firm match up perception-wise what we think the market segment may be looking for? So culturally, is there a fit there? And then financially and internally within the firm, is there a strategic fit that makes sense? In other words, do we have resources available to us where we can use and leverage to reach the market? Does that market make sense for us in terms of the other markets we currently serve? Strategically and from a business perspective, does it make sense for us to try to reach that market? Okay, so in this sense, we have a list of criteria that we can evaluate, and we can look at each market segment and score each market segment based on how well they match up to those criteria that we feel are important to us. So to dig deeper a little bit more into the specifics of this, we can just consider each of the different categories that we just listed, or criteria. So when we talk about size, we talk about the actual market size and whether there are enough customers in the market segment to warrant going into. So we often look at volume, sales volume, and how many units we would actually have to sell or be able to produce in order to satisfy that market. Growth, again, that's the rate of growth, whether the market is growing or shrinking. We can think of that as number of units that we would sell again, number of buying units, number of customers, or revenue. Profitability deals specifically with like how much we could charge versus the cost that we would incur to serve that market, and whether that market would be a profitable market or profitable enough for us. Given the different constraints from competition and building awareness, and again, the price sensitivity of the market would be something we would look at as well. Could we charge more, for instance, for our product, or will we have to charge less? If it's more sensitive to price changes, then we probably would view that market segment as less profitable moving forward. We also talked about habits, culture, the personality of the market. So is this market one that we could persuade? Are they loyal? Are they committed? Would they culturally fit us with what we have to offer? Does it make sense culturally for them to buy our products and for us to serve them? We talk about competition. So like how many direct competitors would we have? What is the what is the composition of our competition? So is it like a lot of competition that like the concentration ratios is something that we look at in terms of market share and things of that nature. How much market share would we have relative to our competition? So relative market share, would we be a big player right away? Would we be a small player and have to earn our market share? Are there competitors who we could take market share away from if we entered that market, or ones that would be susceptible to us, and so forth. Strategic fit, again, what resources we have, what can we do that we do well, that makes sense for us to enter this market segment. Can we leverage the skill sets that we have to gain market share, to earn sales, to earn the market? Does it make sense within our product portfolio also for the product for us to enter that particular market? Okay, so again, these are like 8 different things, 7 or 8 different elements here that we can look at and we can measure, and in doing so we can score each market segment, and then the ones that score the highest are the ones that we would want to enter into. So moving forward, as we think about like choosing the best market segment, we may want to define our segments in a certain way based on size. We also want to consider how many different market segments we would want to enter, and do we want to enter more than one at a time or only one at a time? Or do we want to split our market segments up into multiple segments and approach it that way? So when we think about scope, and market entry, we have to spend some time to think about how we want to define the market. And this again is kind of an outcome of that segmentation process. The different segmentation criteria we use will create different market segments. And so we have this range from very, very, very narrow to very, very, very broad. And so when we think about a very narrow market segment, we think of a market segment that is very carefully defined and very narrowly defined, so that potentially we could have like a one-to-one environment or a niche market or a market where there are very few customers and the customers have very specific needs that we're trying to satisfy uniquely. At the other end of the spectrum, we have undifferentiated or mass market environments where everybody is more or less treated the same. One product more or less fits all, and the needs and the individual uniqueness of market members is not really identified. And so we try to have a lot of volume. We try to sell to a lot of customers volume wise, but what we're selling them is not a unique product or a unique value proposition that's specifically designed for each individual consumer. So there are pros and cons to each of these approaches, and kind of the range of everything in between. And you'll note that there are specific terms here. So if we have a customized one-to-one type of market definition, that's something that we have. A concentrated or a niche market is larger than a one-to-one environment, but it's still very narrowly defined. Target markets, differentiated markets, are ones where we have some definition and distinction and differentiation between what the customers want, but it's not as narrow as a niche market. And then finally, the mass market environment is where we try to fit everybody into one product category and serve everybody all at once. The mass marketing approach has some pros and cons to it. Certainly customers are not always needs are not always best met because we're trying to serve everybody with one single value proposition. So everybody's individual needs are not completely identified, but our per unit costs, of course, to do this are smaller. So our expenses and costs per unit go down the more we mass market, but the customer's needs aren't necessarily met best. So when we think about advertising and you think about mass media or mass marketing, those types of advertising expenses are generally fairly low per advertisement or per exposure. Product development costs are lower and distribution costs are lower as well. So in general, when we follow a mass marketing approach, our costs are going to be lower, but the customer needs are not going to be met as well as if we use some type of a niche or one-to-one type of an approach, or even a targeted differentiated approach as well. At the other end of the spectrum, we have the one-to-one marketing environment where each customer is essentially their own market segment. And so each customer's needs are met very, very well. However, the expense to do this is very high. So like direct selling, for instance, is an expensive way to promote and to advertise. Direct anything tends to be a little bit more expensive. Customization of the products, of course, is more expensive to do. Like I say, the direct marketing costs are more. And in general, maintaining direct one-to-one relationships is an expensive way to move forward. So as you think about the scope of the market and how we define the market segments, we also consider kind of how we want to approach the market from a volume and from a cost perspective and from a consumer need perspective as well. And for some companies, it makes sense to jump in and create a product that's good for everybody. Other times we want to be more tailored and more specific in our approach to products. So there are three broad strategies that kind of relate to this as we move forward that you should be aware of. One strategy we will call a breadth strategy, and this is where we have a single product that's intended to serve multiple markets. So this is something that we would think of in a mass market environment. A breadth strategy is one where a product will satisfy a breadth of consumers or a wide range of consumers. So the single product would be used in multiple market segments. If we want to move in the other direction and be more narrowly focused on a specific market segment, we might use a depth strategy. The depth strategy suggests that we have chosen a single segment that we want to satisfy in a very, very complete manner. So we have several products that would satisfy that one market. So in this case, we have segment D that's being satisfied by multiple products. And our goal is to have a lot of market share in that and be kind of the owner. We might think of this as a niche market approach, maybe targeted, but most likely a niche approach is what we're really focused on here. The last strategy that you can think about is a tailored approach where we might have a couple market segments identified and we have a specific plan or market approach or value proposition for each market segment. So this is really the differentiated or targeted approach that we saw earlier. When we view the market from a targeted or differentiated approach or manner or way, then what we want to do is we want to tailor a value proposition to each market segment that we offer. So if you take this tailored approach and take it to an extreme position, then you'd have one-to-one or customized marketing. Right, customized marketing would be something that we would do. Okay, so basically what we wanted to do here in this short presentation was to talk about analyzing market segments. Which segments would be best for us would be the ones that score the highest on our scorecard using the 7 different criteria that we looked at, from market size to profitability to fit and so forth. And then we looked a little bit at this idea of defining the market and the scope of the market and the entry strategies that we would have, or the strategies that we would use in terms of defining our market segments and how we are going to enter and serve those markets with a range from customized one-to-one marketing approaches or definitions all the way up to mass marketing, undifferentiated market approaches.